tariffs? Are you worried about a full-blown trade war?
Yeah, well, I put in context. So competitive tax reform is good. Regulatory reform is good. Infrastructure is good. We don't believe these tariffs. I think the president has pointed out legitimately and his advisors that there are serious issues around trade. The WTO needs to get its act together and get a little more ambitious in terms of fixing some of these problems. But I think the tariffs is the wrong way to go about it. Of course, there may be more. There may be retaliation. It kind of opens up a whole Pandora's box of additional problems.
Will it escalate? And if it escalates, does it hurt U.S. growth?
Yeah, it could escalate. It could hurt growth. But I don't know. I'm not predicting it. But yeah. I think you should expect more. I hope it also brings people to the table to negotiate. And I hope the Americans are being very specific with the Chinese, Mexico, Canada, saying here's what we think is fair, here's what we want, and have a mature conversation and get it done. You know, the president and his people legitimately say, hey, we've been having some of these dialogues for 15 years and they don't work. And so this is kind of a shot out there. But again, most of the business community would have preferred set out a strategy, organize it properly, tell people what you want, negotiate it, and if you don't get it, sure, then take action.
Do you think businessmen and chief executives will hold back from investing money in the U.S. until they figure out exactly what this means?
I don't, not yet, no.
If it escalates, will they? The Fed is also waiting for wage growth, right? Does this hurt wage growth prospects?
I don't think it's going to do anything immediately. I think it's just noise and press, and you think most Americans are going to work today worrying about this? They're not. There's 150 million people wake up every morning to go to work.
But chief executives are.
Yeah, but chief executives are going to wait and see and take a little measured approach and see what the next round is and who gets exempted. But if it continues and it gets worse, yes, it will hurt growth. It'll hurt, investment, not just in the United States, maybe elsewhere. So it could offset some of the very huge positives we've had from competitive tax reform.
What does Gary Cohn resigning mean for the business community?
I think it's terrible. I think Gary is a very strong proponent of economic growth. I think he's quite bright and knowledgeable. I think he was good to have in the White House, not as the press writes to defend Wall Street. He knows how an economy runs. He knows what needs to be done to make it healthier for all Americans, and he's not there. So, it's unfortunate. And, I called him yesterday. I wish him the best. He'll be fine. But, we'll see who they put in the job next. It may be very important.
What is Gary doing next? Did he tell you?
I don't know. He did not tell me, and I'm sure he's going to have plenty of opportunities.
Who would you put in charge, or who do you think the president should put in charge? Someone, again, that was close to the markets, close to Wall Street, or just a business?
I don't know. I really haven't thought about it very much, so it's hard for me to give you a list. I hope it's someone who's knowledgeable, thinks strategy, is strong. The president likes strong people. If he's not strong, I don't think it'll work very well. But hopefully they'll understand markets, global, our allies around the world. It's really important that we maintain good relations with our allies around the world.
How's business overall? It feels pretty good. What's the biggest risk out there?
You're talking about JPMorgan. Oh, business is doing great. The United States is accelerating from 2% to maybe 2.5%, and I'm hoping it'll do 3%. Competitive tax reform is necessary. Yeah. It's amazing to me that people think somehow you can say, I want an uncompetitive tax system, and that's good for the country. And I'm very confused about it. You may have different views about what we should have done on the individual side. And I think the regulatory reform, and think of it as, the public should think of it as bureaucracy reform. It is so crippling. Like in America, take 12 years to get permits to build a bridge. It's disgraceful, and we've got to get a little wiser how we run the economy for the benefit of all the people. So the infrastructure stuff will hopefully be good, and so the economy is accelerating, and companies are in great shape, consumers in great shape, household formation is going up, millennials are doing fine, and the whole world seems to have growth, which is obviously good for both America and everybody else. So,
and the Fed's on top of it all.
The Fed, people think the Fed is very smart, but they don't control the economy. And, sometimes they're just riding the Bronco.
Well, so they try to, right?
They have to react to it.
Right.
So sometimes it's smooth sailing and it's easy for them to react to it. And sometimes it's pretty tough. So you can't always assume they can't predict the future either. So I think that people make mistakes and somehow they got all these leverage and they're going to keep it smooth sailing. They can't do that. They try, and of course it's a reasonable objective, but we'll see.
Talk to me about your expansion plans. You're pretty confident about the future, right?
Oh yeah.
And so
we're expanding in every business we're in. I think organic growth is hard. I always tell people adding sales force is hard, growing branches is hard, signing leases is hard, and a lot of companies they don't want to do it because it's actually really hard. But we're adding opening, we'll probably be opening countries around the world. We're adding 400 branches in the United States in markets we're not in. We're doing it because of tax reform and regulatory reform. And, it's just an example. People say that stuff didn't hold back America. It did hold back America because, now companies are expanding with capital expenditures. We're going to do $10 billion more of LMI lending in lower middle income households, $4 billion more of small business lending. Those 400 branches are going to add 5,000 jobs directly, probably another 5,000 indirectly. And we go into a town, we're going to add philanthropy, LMI lending, other mortgages, small business, private banking, to help the economy grow. So we have and we're also raising minimum wages in major cities to $37,000 a year.
Yes, so that helps with inflation.
Yeah, exactly.
So are you expecting U.S. banks just to get bigger and European banks to continue shrinking, actually? I mean, can anyone in Europe really compete with you guys?
Look, my view is there's always competition. And whenever you take a deep breath and say, oh, my God, it's going to be easy, it's not. It's always coming from somewhere else. Banks tend to recover. I do think that, if you would look at the European banking system, and this, I'm saying this for their benefit, they need to be allowed to merge and expand and have a pan-European banking system. If they don't, it's a huge disadvantage to them for the next 50 years. And so if I was running Europe, which I don't, I would be really conscious about trying to create that.
Okay, but so if these banks do merge, do you think it will be a tougher contender for you?
Yeah.
Is it going to be a tougher rival?
I mean, listen,
so size is critical.
SocGen and BNP are tough competitors right here. Deutsche Bank's a tough competitor in Germany. There's a bunch of tough banks in the UK. But in terms of global investment banking and stuff like that, they're a little hamstrung if they can't kind of get bigger and merge.
If you were to start a bank from scratch...
But then we have to compete with the Chinese banks.
Right.
Okay.
But what role do they play in the U.S.? Or can they play a role in the future?
Sure. If you take ICBC, they used to, like 30 years ago, they were in one country. Yeah. Now they're in 70. They make more money than JPMorgan Chase does. Their government likes them, and they have a natural home market, which is a huge advantage, and a natural market outside, which is banking Chinese companies as they grow. And so they are already on the playing field. They bought, as you know, one of them bought a small trading house. They're ambitious. They should be. I want to make sure I can compete against them. And I'm going to, so help me God, okay?
Okay. What helps? I mean, are you entering a new agreement with Amazon on the credit lines?
Oh, I can't talk about that. Amazon's a great partner of ours.
Yeah.
We do their credit card. We help bank them. We do a bunch of stuff. Jeff and I are friends. I think the world of them. And but I think when you look at this world that you hold the apps and all that, there will obviously be a lot of people trying to embed services and make it easier to pay, easy to shop, easy to do that, which obviously includes banking services. So you already have that embedded in your apps, and we have Zelle, real-time P2P. We're going to have online trading, robo-investing, movement of money, more and more services. So we're going to do all that stuff. We just started an online-only bank, and we already dominate millennials. Like we literally, I don't want to tell you the percentage, but it's a huge percentage of new accounts are millennials. So if you go to the millennial population, we're already winning there.
But if you do enter an agreement with Amazon, do you worry at any point that actually you give them the secret sauce to go into banking? Right? Do they then become a rival at some point?
Yeah, I think any agreement you have where you're partnering with someone, I'm not talking about Amazon, you should think about, is it fair and equal to both partners, stuff like that. No one's going to enter an agreement where at the end of the day you have nothing and they have everything.
No, of course.
Okay.
But down the line, can Amazon become a bank, is what I'm asking.
I think they can do whatever they want.
And that would be a problem for you?
Well, remember, when we look at competition, look at WeChat and Paytm and Alibaba. And I mean, these things are happening, and JPMorgan has to figure out how it's going to do that because the client wants stuff. So all these other, it's not just Amazon, all these other large companies, will be looking at how they can be a bank, buy a bank, have bank services, embed bank services, use bank data. And so it's a big deal.
Do you think the markets are complacent to risks
well,
out
you're
there?
You're going to know in 2 years whether they're complacent or not. So if markets go down a lot in 2 years, you're going to say, well, obviously they're complacent. No one knows the future. If, in fact, we've got a couple of years of good global growth, which you could postulate is a pretty good possibility, then they're not complacent. They're pricing in earnings growth and stuff like that. If the 10-year bond goes up, but it's with healthy growth, the risk premium will go up and all that, but it doesn't mean that stocks can't grow into it. If you postulate we have a recession this year, well, obviously stocks are overpriced. I mean, but the point is...
you're not expecting a recession this year?
I never guess the future. I don't know what the future is going to be. No one knows what the future is going to be. If you ask me my opinion, I think we're okay for a while. One day we'll have a recession. I don't know if it's 2 years. I don't think it's this year, but could it be late 2019, 2020?
What would trigger that recession? Is it impossible to say?
Well, if you look at history, often they're triggered by over leverage, which is not really the case today. overbuilding in real estate. You've seen commercial and consumer real estate cause the problem. It's not often a geopolitical shock, but that's done it too. So there are multiple reasons that cause it. But we're heating up, wages, which is good. Wages going up, which is good. I mean, all the things happening today are good, and now we're climbing the wall of worry. Which, I tell people, okay, once we're really growing, you can start worrying about inflation. Well, of course, that's legitimate, but I want the growth. I don't want to say we're going slowly, thank God, and we don't have to worry about inflation.
Jamie, it's International Women's Day, so I want to ask you about women in finance.
Yes.
Your metrics are good. Will you do more?
You noticed, didn't you?
Yeah.
So 50% of my direct reports are women, 30% of the top 200 people have got major jobs around the world. We have exceptional women. We believe in the women's cause of equal pay for equal job, which we just put out a report that we do have that.
Yep.
There are other reports coming out which are, it's not whether you have equal pay for equal job, is why are women an average, not the same job, where they give less opportunity. That's possible too. So what you try to do as a company, make sure you're treated fairly. You're given the same opportunity. That women are on promotion committees and compensation committees, so that's very fair. So we support all that, and a lot of it are companies led by our women. They invented a thing called Women in the Move, which is our senior people, Marianne Lake, Mary Erdos, Lori Beer, who runs technology, probably the only woman in the world who runs technology in a major bank. And they've set a huge tone to how we're going to get out, help the women we have around the world.
Jamie Dimon, thank you so much. That was the Chief Executive and Chairman of JPMorgan joining me for an exclusive conversation.